Sydney rents are dropping. Here's what that really means for you as a first-time investor. What you'll learn in this video. Before we dive in, here's what we're gonna cover today. Why rents are dropping in some parts of Sydney, but not all. Which suburbs are seeing the biggest changes? And what's driving this shift? And whether it's just a blip or the start of something bigger. And what does this all mean for you as a first-time property investor? And finally, guys, how to use this data to make smarter strategic investment moves right now. Let's get into it. Key takeaway, guys. Around 75% of New South Wales suburbs have seen rents either flatline or drop in the past 3 months. A big shift after years of relentless increases. Some areas like Concord West, Sylvania Waters, Chipping Norton, Greystanes and Camperdown have seen weekly rents fall by $100 to $200 per week according to this data. But don't get it twisted, guys. This isn't a rental crash yet. Most areas are still riding high after massive jumps in the past 2 years. Rental growth may continue into 2025 and 2026, but just at a more realistic, slower pace. So you might be asking me, Q, so what's going on? Here's the first big shift we need to talk about right now. After a couple of wild years where rent prices skyrocketed like Bitcoin on a bull run, it looks like some heat is finally coming out of the market. According to the PropTrack latest data, almost 3/4 of New South Wales suburbs have seen advertised rents either plateau or drop slightly in the last 3 months. For first-time investors, this might sound alarming, but hold on, guys. Remember, in today's video, we're exploring what this change really means for you, not just what the headlines are screaming. Let's break it down and get you ahead of the curve. Now let's get juicy. Where are the rents falling the most? We're talking about suburbs like Concord West, Sylvania Waters, Chipping Norton, Greystanes and Camperdown, where right now in the data we're seeing weekly rents drop between $100 and $200. For renters, that's a potential saving of $10,000 a year. And that's not a small change in this economy. And from my analysis, these suburbs have a few things in common, guys. Number one, there's been a big jump in investor activity recently. Investor lending, from my perspective as a mortgage broker that sees thousands of loans every single month, has been increasing. There has been a lot of investors fighting for property in these areas. And with more investors, more dilution in the market, rent is coming down due to competition. Number two, new apartment builds have added a lot of rental supply to the market. I mean, from my perspective, rents are already high to begin with, guys. So even with these small drops, it feels big. Now keep this in mind, guys, as we continue, because later we'll revisit why these local traits matter for your strategy as an investor. But right now I'm talking about this is a big but. Don't assume that this is happening everywhere, guys. This is a note from me to you. This softening is not universal. In fact, Sydney's east and inner west are still ultra competitive. And you might be asking, rents there? They're still going above asking price. Tenants are even bidding extra just to lock in a bloody lease. So while the heat's easy in some pockets, it's still boiling in others. And this is why this is important, guys, for my investors who are watching this. Because in today's summary, I'm saying that location will determine your outcome. And right now, this data proves it. Now next, we're talking about why is this happening right now, Q? Well, a few reasons. Let's start with the quiet return of investors. Even though lending to investors is still below its peak, it's been steadily increasing. And in some suburbs, that extra rent shock is enough to tip the supply-demand balance, ever only slightly. However, on the flip side, tenant behavior is shifting too. Right now, as I hear from my current clients, more people are moving in with their family to cut costs. Others are sharing homes again to cut costs too. And for some families, they're straight up leaving Sydney at the moment. Some are heading to Queensland for cheaper rents and a slower pace of life. And with all this happening above, this reduces immediate demand. And right now, that gives rent a little breathing room. So right now, this connects back to what I was mentioning earlier in the first top half of this video. And that is, guys, listen up, is about understanding the supply and demand shifts. If you understand that, that will be your real advantage as a first-time investor. But right now, I know what you're thinking from my spider senses. You'll be like, hey Q, is this the start of a rental crash then? Guys, I told you guys, relax. The short answer is no, there's no rental crash happening. Like I said before, some suburbs are showing signs of rent easing. But again, guys, let's keep things in perspective. only in certain suburbs. Over the last few years, some areas saw a 20 to 30% rental growth. So think about it, guys. Even if rents drop by $50 to $100 a week, that is a drop in the massive ocean of rental power at the moment that landlords have, especially comparing to the pre-2021 levels. And right now, it's unfortunate for me to say this, but a lot of tenants right now are still doing it tough, especially in high demand zones. And fortunately for us, they won't move out because they love keeping up that lifestyle, even though living expenses are biting at their feet. So right now, let's look into the real data. Let's zoom in. PropTrack economist Anne Flaherty sums it up well. Rents have eased a little, but we shouldn't expect a major drop from here. In fact, from my data, 2025 could bring more rental growth, guys, but just at a slower, more sustainable pace than the madness that we saw in 2022 to 2023. Now, this matches to what we flagged up top. This isn't a crash. It's a correction. That's right, guys. Stay with me. It's a correction. And we'll soon talk about what to do with these insights. So the next question you might be asking me, what will shake the market from here right now, Q? Right now, guys, there's two levers. Lever number one is new supply. If more investors keep buying and developers build fast, that could stabilize things, guys. Number two, population growth. Particularly overseas migration, if we keep importing demand but don't build enough homes, rental pressure will return fast. So between me and you guys, as investors, we love immigration. And just like we covered in the summary above, housing supply versus population growth will determine whether this dip holds or rebounds hard. So right now you might be asking me, what should first-time investors do with this info, Q? Well, if you're a smart and aspiring property investor, this is your moment to be strategic, not scared, guys. I mean, yes, some suburbs are seeing rent dips, but that's not the whole picture, guys. This isn't a market collapse, guys. Let me remind you guys again and again, this isn't a market collapse. It's a market correction. And corrections create entry points, guys. Remember, guys, you're not in the game to make a quick flip. You're here to build long-term wealth and the generational curse in your family. Build generational wealth, as I always harp on about on this channel, because right now, Australia still has a chronic housing shortage, sky-high population growth. I mean, come on, guys. Labor is still back in power. Immigration is just gonna quadruple, guys. And a city like Sydney that attracts people, jobs, and capital, you can use this data to your advantage as a first-time investor. So right now, let me show you how you can position yourself smartly and not get swept up in fear. Because right now, for you first-time investors, I want you to see this as a short-term adjustment, not a long-term reversal, guys. My powerful reminder to you guys is to go back to location, location, location. Where you buy matters. My biggest tip to you is always avoid high-density investor hotspots where everyone's fighting for the same tenant. Right now, my smart investors, even first-timers, they need to look past the media headlines. I'm talking about realestate.com, news.com, Daily Mail. I want you guys to find the opportunity in the data that I've been talking about on this channel forever. I want you guys to think 5 years ahead while everyone else panics over the last 5 minutes. So right now, if that sounds like the kind of investor you want to be, I want you guys to do two things. And let me be Morpheus over here. You know, like Morpheus in the Matrix, and you guys are Neo. You have two choices. Right now, I have the red pill and I have the blue pill. The red pill reveals the truth. The blue pill allows you to stay in blissful ignorance. If you take the blue pill, guys, you just watch this video, you scroll somewhere to another TikTok video, another Instagram video, another YouTube video, and you just laugh it off going, ha, that's not me. I'll just wait for the market to show me signs to buy now, which is or take the red pill, which is to dive deeper into the rabbit hole of this data and find out where is the right place to buy. So right now, I'm offering you the opportunity to book a consult with me, either a 15-minute strategy call or a 60-minute deep dive, where you work with me and my group of mortgage brokers, my trusted buyers agents, my accountants, my financial planners, my A-team to help you build wealth as a first-time property investor. And again, guys, to wrap up, if you like this video, smash the like button, hit the subscribe button, and smash the bell notification button for future videos like this. And until next time, I'll see you on the other side. And thank you for watching another episode of That Property Roast.